What's up guys, welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. In this video, we're going to go over some hypothetical price scenarios for BlackBerry. Keep in mind that we're not financial advisors and this video is for entertainment purposes only. Make sure you do your own research before making any investment decisions. So BlackBerry along with the whole market took a huge price dump. It was at a high of around $12.30 and it dropped down to $9.60 within a 2-week period. And this was mainly due to the pains in the market, but it seemed like BlackBerry was falling a lot faster than compared to the whole market. And with earnings coming up, I wanted to draw out some hypothetical scenarios, just to give us a better feel of what the possibilities for BlackBerry's future is. And I'm going to first talk about CrowdStrike's earnings because I want to use them as a baseline. And then we're going to go in depth in terms of financial comparison for BlackBerry versus CrowdStrike in terms of operation income on the earnings reports. And I'm going to show a huge disconnect that I saw between the two in terms of multiples and what it would be like if BlackBerry was, thought of as a growth stock in terms of the security software space and the multiple it could potentially have and what price point and market cap that it will lead to. So let's jump into CrowdStrike's earnings. So CrowdStrike Q4 revenue was at $264 million, and that was a $30 million increase from Q3. So CrowdStrike is doing really well in terms of growth, and to be quite honest, they're doing better in terms of growth compared to BlackBerry. And if we look at BlackBerry's growth, 151 million, 162 million in terms of software and services. So when I make these, just a heads up, when I make these comparisons, I'm going to exclude licensing and other revenue because that's not going to give BlackBerry the multiple it deserves in terms of the security software space and the multiples that are comparable to CrowdStrike. So let's get back into CrowdStrike. It looks pretty good. They still have a net loss, but that's due to interest expense and other expense and so forth. But overall, CrowdStrike seems to be doing pretty well in terms of revenue if we just look at the revenue growth compared to BlackBerry. But once I made this hypothetical scenario, it changed the whole story. Changed the whole narrative. So let's jump into this Excel I created. So this top line here is software and services revenue. Like I mentioned, I'm only gonna include the revenue of software and services for BlackBerry because the licensing isn't gonna be included in the multiple that we want to give BlackBerry. And I included selling and marketing, general administrative, selling, marketing, and admin. I did this because BlackBerry's income statement doesn't separate selling, marketing, and general administrative, but CrowdStrike does in terms of selling, marketing, and general administrative. So what I did here is I used CrowdStrike's ratio in terms of selling and marketing to the whole cost of selling, marketing, admin, and that gave me a ratio of 77%. And I just multiplied selling, marketing, admin for BlackBerry's expense right here, all right here, by 77%, and that gives me approximate selling and marketing expense for BlackBerry. They don't show it, so I have to come up with a creative way to do it. And it's pretty important because I use that in terms of return on investment, in terms of selling and marketing. So what this means is this last line is software revenue divided by selling and marketing. So what it means is how much revenue the company brings in if it spends $1 in selling and marketing. So let's go into this. So for Q1 BlackBerry, their revenue in software and service was around 148 million, and BlackBerry's CrowdStrike was at 162 million. So like I mentioned, the approximate selling and marketing expense for BlackBerry was 69 million and CrowdStrike was 88 million. I mentioned in my previous video that CrowdStrike has a huge growth, and it shows that. But compared to BlackBerry, they spend a lot more. They're spending more in terms of selling and marketing, and that's one of the main reasons for growth. If we look at this ratio here, BlackBerry is doing a lot better in terms of return on investment. If they only spend $1 in sales and marketing, they'll make $2.14, while CrowdStrike will only make $1.84. So CrowdStrike is not as efficient. They need to spend more on selling and marketing to bring up the revenue. And this is the same for Q2 also. BlackBerry had a revenue of 151 million. CrowdStrike had a revenue of 198 million. Selling marketing for BlackBerry is actually lower, 60 million, and CrowdStrike increased their selling and marketing by 7 million, and it ends up being 95 million. So, but although CrowdStrike's improving this ratio, BlackBerry is still ahead. They're 2.49 versus 2.09, and same thing for Q3. Their software and service revenue for BlackBerry is 162 million versus CrowdStrike. This is where CrowdStrike seems to be growing a lot faster. And if we look at just based on the growth, CrowdStrike seems to be a better company. But it's not true. For some reason, BlackBerry don't want to increase their selling and marketing. And just to plug another video, I made a video talking about why BlackBerry is ready to grow in terms due to the fact that they had a whole rebranding on their site, and they're more focused on selling and marketing. And the rebranding shows that with the hire of Tom Ecobachi also. But again, the ratio in terms of software revenue divided by selling and marketing for BlackBerry is 2.55 and CrowdStrike is 2.2. So this is where I have some fun in Q4. Obviously, BlackBerry's Q4 earnings hasn't come out yet, but CrowdStrike has. CrowdStrike had a revenue of 264 million and selling and marketing expense of 112 million. Their software revenue to selling and marketing expense is 2.36. CrowdStrike's improving, but it's still spending a lot more than nearly double of what BlackBerry did last quarter. So let's have some hypotheticals now. So let's say BlackBerry didn't improve their selling and marketing at all, and they just spent 63 million again. And with the ratios I created, I used the ratio here of 2.55 because I'm just going to use the previous quarter, and I'm not going to increase it or anything. And they'll still have a software and service revenue of 160 million. But that's just assuming that they don't increase their spending on sales and marketing, but which doesn't seem like the case, because according to John Chen, their software and service are up sequentially. He always underestimates how well the company is doing in terms of earnings, and his answer to that, if his software and service revenue is up, it's his expectation in terms of the current model. It's up sequentially. So let's assume that BlackBerry spent $2 million more on sales and marketing, and what their expected revenue would be in terms of software and services revenue. And this is excluding any of those Facebook revenue that they might get in terms of the licensing agreement that they figured out in court a couple months ago. This is just pure software and services. So let's say they spent 65 million on selling and marketing. With the same ratio, they would have a revenue increase compared to last quarter of 3 million. But that's just being conservative with the amount that they might be increasing in terms of selling and marketing, based off what we've seen in the whole quarter, the relationships they build. It seems like BlackBerry is really in the growth model. And if I want to be completely honest, and just have more fun with this hypothetical, I'm gonna increase sales and marketing to just a 70, and they would have increased the revenue by 16 million. And if we look at that, they would have an annualized if we analyze the Q4 revenue for software and services, BlackBerry would be at 714 million, CrowdStrike will be at 1 billion and 60 million. And if we look at the market cap of both, the market cap right now at $9.60 for BlackBerry is 5,424 million, and CrowdStrike at a market cap of 38 billion has a CrowdStrike with a market cap right now is at 40 billion, and the stock price is $182. The multiple for BlackBerry in terms of revenue and sales on software and services is only 7.6. What I did there is divided market cap by the software revenue, and that's how I got that. And for CrowdStrike, it's 38 times multiple on revenue, annualized Q4 numbers. And this isn't even CrowdStrike's annual full year earnings. I just annualized it, assume that they're not growing since Q4. And CrowdStrike has a multiple of 38 times. BlackBerry with a 7.6 times multiple has stock price of $9.60. So let's create this scenario. If BlackBerry has the same multiple as CrowdStrike, what value would BlackBerry be at? With a 38 times multiple with 700 million revenue, BlackBerry's value would be 27 billion, and their stock price would be at $48. And some of you might argue that BlackBerry won't get that multiple because CrowdStrike in itself is overvalued. So in case you want to go short on CrowdStrike, if we put BlackBerry's multiple on CrowdStrike, their value would only be $8 billion and their stock price would be $36. See the difference of what it is and what the industry multiple is for software security. CrowdStrike is either way overvalued or BlackBerry is way undervalued. So with the idea that BlackBerry might be way undervalued compared to CrowdStrike, I put a 15 times multiple to be conservative to see what the value of BlackBerry would be. So a 15 times multiple with annualized 714 revenue based off Q4 numbers, their multiple would be their market cap would be $10 billion and their stock price would be $18.96. And that's just being conservative in terms of how fast they're willing to grow. Based off what we've seen, BlackBerry's upping the amount of salespeople they're looking to get for their company in terms of hiring and so forth. And it's totally reasonable that they'll up their game in terms of sales and marketing right now because they have a strong platform. On top of that, they have $223 million in cash, and they have a positive cash flow in terms of operations of $30 million. And that means that BlackBerry has money to spend on the business. It can grow because it's already efficient in terms of their ratio in terms of software revenue to sales and marketing. And that's pretty much it. That's all I wanted to show. And just to end this video, I want to end in some fun note. So yeah, let's have some fun with it. So I wanted to just have a hypothetical scenario where it wouldn't be Q4. Let's say this is Q1 of whatever it is in 2022. They up their selling and marketing to $100 million. They'll have a revenue in the quarter of $255 million. Their annualized Q4 revenue would be $1 billion on average. And if we give them a 15 times multiple which is conservative compared to CrowdStrike. Their market cap would be $15 billion and their stock price would be around $27. That's just assuming that we give them a conservative multiple. That being said, that's what I wanted to show in this video, just to illustrate more of what potentials BlackBerry can have if investors start seeing BlackBerry as a growth stock, because it is, and it could be if it starts upping their sales and marketing. These aren't supposed to be earning report predictions of any sort. Just wanted to have some fun with it, just to lighten the mood in terms of the fact that it seems like BlackBerry is getting shorted to oblivion with the whole market going down. Let us know what you guys think in the comments below. Do you think that these predictions analysis, are reasonable, or do you think that I'm being too conservative with my estimates? That's it for this video. If you liked our content, please give us a thumbs up. We use this as feedback as to whether we're making content worth watching. Thank you very much for watching. And if you like this BlackBerry video, make sure to check out the other ones we made just to see how we analyze the company and what we think about it.